Good afternoon and welcome to BizTech's Asian Midday Market Watch. Tina Teng, Markets Analyst at CMC Markets APAC Canada, joins us out of Auckland, New Zealand. Welcome to the show, Tina.
Hi, Brian. How are you?
I'm good. Thank you very much. Now, Tina, I'm going to come back to you in a bit to get your insights on what's been happening. But before that, let's take a look at the numbers, starting with the crypto markets. Bitcoin is at 19,102.7. It's up 0.31%. Ethereum is at 1,291.23. It's up 1.07%. Now, looking across the regional equity markets, we start with the SGX, which is down 0.36%. Bursa Malaysia is down 0.62%. Shanghai is down 1.21%. The ASX All Ordinaries is up 2.28%. The Nikkei is up 0.02%. The Hang Seng is down 1.87%. And rounding up the numbers, we've got the Kospi, which is up 0.52%. Tina, the markets across the region are pretty mixed. Tell us why.
So I think the Asian markets today is in red. The main reason is getting hit by the Chinese markets. So yesterday, overnight, the Wall Street closed in a negative day because the tech shares dropped. In the tech, the intensified sell-off just happened across the broad markets, just because the U.S. restrictions and the Chinese chip makers sent the Chinese tech shares, including those semiconductor sectors, down. I think the whole market sentiment now is still very cautious, especially now it's going to report the US key CPI data tomorrow, and also a skyrocket US bond yields also sent the markets down because the market's rout now is really way on the sentiment.
Now, overall, if you look at the ASX now, moving on to the ASX in your part of the woods, ASX is pretty resilient, and also there seems to be an outperformance in defensive stocks and resources. Tell us a little bit about that and how we should play the game in terms of our lens as investors.
So this all happened just last week when the RB and the Reserve Bank of Australia downsized its rate hike by 25 basis points because markets was expecting the Reserve Bank to raise 50 basis points. However, the Reserve Bank only raised 25 basis points. There's kind of like they have already hit peak of hawkishness. That's why the whole sentiment across the ASX actually has been lifted, and also a drop in the Australian dollar could support the export. So this dovish turnaround of the RBA just lifted the sentiment in Australia and a rebound in the price of resources and energy. Like last week, the oil price has been rising for 5 trading days. And also, I think the energy and the commodities now are in a kind of like a rebounding trend, supports the Australia. That's a commodity heavy index.
Now, then, Tina, I want to look at bonds then. Are you seeing some pockets of bond markets being oversold, perhaps?
In the short term, I think the U.S. bonds probably have been oversold. We can see the 10-year U.S. bond yield now is approaching 4%, which is resistance. Probably a short-term pullback is in expectation. That's why in the Asian session today, we can see a slightly pullback in the bond yields, which supported this U.S. equity futures, seeing a little bit green today. And I know that the Asian markets now is still in red, like especially the Chinese markets. I can see the Hong Seng index in a downturn as well. I think just the now because the rate hike of the Fed forced the APAC region, especially Southeast Asia or the central banks, they have to catch up the interest rate as well. But this rapid raising rates actually are hurting investment confidence as well as the economic outlook. That's why we can see right now it's very different moves between US and the Chinese related stocks.
And then how about then the UK with all the policy flip-flops? What's investors' view now in terms of the bond markets as well as UK as an investment destination?
Since in the UK, the Bank of England now they are signaling that they could continue to buy the bonds because like as we all know, like last 2 weeks, the new prime minister just they launched a new stimulus package which really causes the bond market rout in the UK. So that's very dangerous for the whole economy. So the Bank of England now they have to do something to save the bond markets. In the regional schedule, this bond buying program will end by the end of the week, but there are speculation that they could extend by bond buying. So it's all around this bond markets, if they would continue to buy the bonds or not. If they don't, probably we could see there will be another crash of the British pounds as well as their bond markets.
Okay, and that's something to watch out for. Tina, thank you very much for insights and thank you very much for coming on the show.
Thank you, Brian.
Now, I'm Brian Fernandez, and we've been speaking to Tina Teng, markets analyst at CMC Markets APAC and Canada on BizTech's Asian Midday Market Watch. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks again for tuning in.